why the scan is buying Bank of America Corporation right now. The exact levels come at the end. Judge the evidence yourself first. If a fresh scored setup every day is useful to you, subscribe and drop a like. And send this to someone who trades. The plan for the next few minutes: retail signals, institutional footprints, then entry, target, and stop. Evidence stacks in that order. Let's go. Let's read the tape. Daily time frame, 60 bars on screen. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $73.61. Red is our SL at $60.49. Those are the two numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double bottom, ascending triangle, rising wedge. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. 1 second. If charts like this are your thing, subscribe now so tomorrow's scan lands automatically. Pattern number 1, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs, 49.70. Measured move target, 54.76. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 12.4%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2, this is the ascending triangle. It's a bullish formation with 2 out of 3 strength. Flat resistance 61.98 with rising support. Breakout upward expected. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 117.8%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Pattern number 3, this is the rising wedge. It's a bearish formation with 2 out of 3 strength. Rising but narrowing channel. Bearish reversal signal. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 5.0%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Candle signal number 1, a hammer just formed on the very last candle. See the dashed box on the chart? That's where it printed. It's a bullish read with 2 out of 3 strength. Long lower shadow in downtrend. Bulls rejected the lows. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Candle signal number 2, a 3 white soldiers just formed on the last 3 candles. See the dash box on the chart? That's where it printed. It's a bullish read with 3 out of 3 strength. 3 consecutive higher bullish closes. Strong sustained buying pressure. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Here's the level map, and where our entry, target, and stop sit inside it. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SS inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of +51, technical 0.1. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 32, and that tells us we're in a strong trend regime. Important, because some strategies only work when ADX is above 25. On-balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Now we switch lenses. Retail view done. If the institutions aren't on the same side, none of it matters. Smart money concepts. Let's check. On the daily chart, the SMC bias is bullish, with an uptrend market structure. The most recent order block is a bullish zone between 60.71 and $61.50. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between $57.75 and $57.94. Price tends to revisit these imbalances. Most importantly, we just had a BOS bullish move at $59.20, a key structural signal that smart money traders watch closely. Next up, volume profile. It shows where the heaviest trading happened, and those prices act like magnets. The point of control, the most traded price, is at 52.07. The value area runs from $47.39 on the low side to $54.83 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bullish. Price $62.48 is above value area high, $54.83. Trading above VAH indicates bullish strength. POC at $52.07 is key magnet support. Now, order flow. We estimate buying and selling pressure from each candle's close and volume. Over the recent window, buying pressure accounts for 60% of volume versus 40% selling. The overall flow signal is bullish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 62, signal neutral. Williams %R is at 17, bearish. Chaikin Money Flow reads 6, bullish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Now, even though this is a technical analysis channel, we always sanity check the fundamentals. Here, revenue's growing 17% year over year. That matters because it tells us whether the chart is rhyming with the underlying business, which is when the highest conviction setups happen. Quick zoom out, the bigger market picture. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing, a setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. 1 minute to the trade. If you're finding value, the subscribe button is right there. Daily scans, posted results. Now the slide nobody on YouTube actually talks about. Risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and one bad trade can take you out. This is what you stayed for. The trade. Bias is long. We'd look to enter near $63.21. Take profit sits at $73.61. Stop loss at $60.49. That puts us at 3.82 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 3.82. Horizon is roughly 5D. That's the play. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. Save this video for the open and subscribe. A fresh setup drops every day. So zoom out for a second. What we just walked through on BAC, that's a long bias setup projecting roughly 16.5% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Tell me in the comments, taking it or fading it? Trade safe out there. Tomorrow's scan is coming. Same time tomorrow. The scan runs, one chart wins, and you get the full breakdown. Don't leave it to the algorithm. Subscribe and turn on the bell. See you in the morning.